I think just like me and all of my friends and all of you watching this video, I think we all have this one intention, or we ever had this one interest, that what is stock market? How these people earn 700% profit or 800% profit or even 500% loss? Like, what is it exactly, and how can I earn maximum profit? Or is it there any possibilities that I will ever invest my money in stock market? We have seen so many entrepreneurs, we have seen so many business magazines saying this one thing, that you should invest. If you have invested your 10,000 rupees in an XYZ company in 2000, then right now in 2021 you might be having 7 to 8 crore rupees. We all have heard, or we just heard, or we have seen in so many movies, people earning 800% and 1000% profit. Or we also have seen that people are losing so much amount of money. So what is it exactly, and how can you invest that 10,000 rupees? And the biggest question is, in which stock, in which sector, and after what and how many research you can invest money in stock market. A very good morning to you all. My name is Shubham Bisht and I welcome you all once again back to this amazing platform of YouTube named as Happiness Prime. This new series named as Stock1Prime, where we will be uploading all the stock related videos. And let me tell you, if you are a complete beginner and you are looking to invest in stocks, or you ever had an interest in stock but you are always confused and you have millions of questions in mind, that what to study, how to study, in which stock should I invest, which company is best, which sector is best right at this moment, which stock exchange platform, stock exchanges are best, where I will never lose my money, or where the brokerage charges are mediate or not very high. These all questions, like multiple and many questions you have in your mind. In this Stock1Prime video, Stock1Prime video, we are going to start learning from the basics. First of all, in this video we will clear, in these next 20 videos we are going to clear about all the terminology of, while you are investing in stock market, whenever you need to invest in a company, you have to check all of these factors, and on the basis of the study which you do. See, this is very simple example. Whenever we go for an exam, we have to put our best study. We have to focus completely on each and every chapter, because the question can come from any of the chapter. We don't know. And just like that, whenever we invest our money in stock market, then we have to go through each of these sectors, and all of these sectors, if they are showing positive growth, if they are showing the signs to invest in that particular company, then only you can completely maximize your bet on your studies. See, stock market, some people say that it is a betting, some people say that it is knowledgeable thing, but let me tell you, I have been through it, I have studied it, and I have practically implied it. Stock market is completely not gambling, it is completely not losing your money, it is completely based on knowledge and the studies and the stock study which you are doing before investing. So you need to know the company on which you are investing your money on. So now let's start with this particular video, where we are going to discuss about three terms, and I am also going to show you the screen share about what we are talking about. The three terms which we will discuss in this video: first is market capitalization, second is earning per, I'm so sorry about that. First is market capitalization, second is earning per share, EPS, and third is PE ratio. And we will also learn that how can you judge a company is good to invest, or it is showing positive growth, or it is showing positive profit growth over the years. And we will also learn that how you can judge a company is good to invest or not based on the PE ratio. So this first video, I hope you will get to learn the best values. Do not even blink your eye, because this video is going to be very much exciting and filled up with all the informations with examples. So I think let's get started. So the first term which we are going to learn in the stock market research and how to do a stock analysis. And I need to tell you one thing, that in this next 20 video series, or I think 25 video series, if you get to learn each and every term, and if you understand the basic concept of these terms, which I will explain with examples, then you will become the perfect and expertise and the most expert in investing in stocks. I can assure you, I can bet you that you will be aware of each and everything, and there will be nothing left, and you can invest all of your money like 10 lakh, 20 lakh, 50 lakh rupees based on this stock studies. Yes, the stock analysis and the terms which we are going to discuss in this complete series, in the stock market beginners series, you can learn each and every term to just understand what is exactly stock market, how you can rather decide to invest your money, your valuable money in a company. So let's start with the first term, that is market capitalization. What is market capitalization? Let's say an example that Reliance is a company, and if I want to become the solo owner of that company, then the amount of money which I need to pay to the Reliance to purchase or to buy that company, or to become the solo owner of that company, it is called market capitalization. I'm going to show you with an example.
First of all, I am going to share you the information about the platforms which are preferred or which are suggested by most of the stock market investors, because in these platforms you will get complete information about all the companies which are BSE registered and NSE registered. You will see here, you can see all the ratios about the company's today's high, company's lows, the market capitalization, PE ratio, PB ratio, book values. Here the valuation chart, that is PE to historical PE ratios, and you can also see the comparison of the other companies in the same sector. Apart from that, you can see the profit growth ratio, sales growth ratio, ROE, ROCE, and everything about the company. And in addition to this, you will also get to see about the ratings, the annual reports of the company's presentation, investors presentation, the quarterly results of the company, and a lot more information. So I love this website, and this is used by most of the investors. The name of this website is tickerphenology.in. Yes, this platform is used by most of the investors, as well as I suggest you to use the same. Apart from this, Ticker Tape is also one of the nicest platforms where you will get all the updated information. And here you can see, if I write HDFC, so here I'll get all the information about HDFC Bank Limited. Here it is the high low returns and the PE ratio, PB ratio. And one best thing which I get to learn about this platform is the forecasted and ratings. These thing is not present in Ticker Phenology. 93% of the analysts are suggesting you to buy the stock, that is HDFC Bank. And apart from that, if you just want to go through all of these terms, after that you want to see which one was correct and which one was giving good indications to buy the stock, then you can see all of these segments. No red flags, entry points. This is dividend returns. The stock is not giving good dividend returns, so this is highlighted here. So this is also one of the nicest platforms which you can use to do your stock research. Now let's come to the ticker phenology and the first thing which we were going to discuss. So let's see about Reliance companies. If I want to become the solo owner of Reliance Industries Limited, then the market capitalization of this company is 13 lakh 5,958.35 CR. This is the market capitalization of Reliance Industries. That is, of course, infinite amount for any individual. Market capitalization also says that it is the aggregate valuation of the company based on its current share price and the total number of outstanding shares. That is, that what is the company's worth right now according to its current share price, that is this one, 1931.30, and the total number of outstanding shares. If you want to see the total number of outstanding shares, here it is, number of shares. shares. So even if you multiply this value by this value, you will get the market capitalization. That is what we were going to talk about in the next part. That is, if you want to calculate the market capitalization, it is very simple. That is, you just want to multiply, you just need to multiply the price, current price of the shares with the number of shares of the company. There how you can calculate the market capitalization. So, and overall, if I just want to repeat this one thing, that if you want to become the solo owner of a company, then you need to pay this much amount and you can become the solo owner of this Reliance Industries. Now let's see some other companies. Let's see Cipla Limited. In Cipla Limited, you can see 71,207 CR is the market capitalization, which we can also calculate by the multiplying price, current price of the Cipla, the one stock of Cipla multiplied by number of shares Cipla is having. So this will give me the market capitalization.
So we are focusing the best on each and every term, so you get to learn the best and you can do the best stock analysis. Yes, there is no book you need to read, or there is no movies you need to see to become a best stock investor. There is nothing like that. It is just hard work and knowledge and more awareness on different companies news. You have to read newspapers sometimes. Once you get interest in particular field, you will do your best and you want to learn more and more in that particular field. So as you learned about the market capitalization, let's move on to the second term which we are going to read, that is EPS, that is earning per share. What is earning per share? As the name denotes, it is the amount which you are going to earn on that particular share. Now let's understand this with an example. It is very easy with example, right? So let's take an example of this company which I'm working in right now. Let's say that YAKS Group is having 5 directors, which is in actual it is having 5 directors, but don't take a real example. I'm just letting you know that how to understand this fact. So let's say an example that YAKS Group is having 5 directors. A company is having 5 directors and the company is having 5 shares in the stock market. So each and every director is having 1 share, equal shares. Now let's say an example that company is making an annual profit of 1 lakh rupees. Annual net profit of YAKS Group 1 lakh rupees. Now on each share, behind each share, every director will get approximate 20,000 rupees. So one director will get 20,000 and all the directors will get 20, 20, 20, 20, 20. So this is known as earning per share of the directors. Earning per share of the directors, that each director will get on the net profit. If the company is making 2 lakh rupees, then 2 lakh rupees divided by 5, because there are 5 stocks. So behind each stock, how much is the earning of all the shareholders? Now let's take an example of a virtual example. Like let's say there is an X company and the X company is having 4 directors, or you can say 4 owners, or you can say 4 shareholders, and each and every shareholder is having equal number of shares, that is 4 shares. 1 share, 1 share, 1 share, and 1 share. A, B, C, D are four members, and each and every person is having 1 share. Now this X company, if this X company is making 100 rupees net profit of the annual year, of the yearly net profit, if it is making 100 rupees, then A will get 25 rupees, B will get 25, C will get 25 rupees, and D will get 25. So this is known as earning per share. Now let's take with an example.
Now let's go through the actual companies and see the real live example of earning per share. Yeah, EPS. Now you have to see where the EPS is located in this list. Can you see the EPS? Yeah, we can see that. Here it is, right? EPS. So 32 rupees point 98 is the EPS of Cipla Limited. So we will denote a few things after that, but before that let's go through any other companies also. Now let's see Dixon. What is the earning per share on Dixon? So here you can see 23.50 53 is the earning per share of Dixon Technologies, whose price of one share is 3960 rupees. Now you can see one thing, you can analyze one thing that is very important, and you have to listen it very carefully. That price of this share is the amount which you are willing to invest to get an approximately year profit, a point that is equal to earning per share. I'm going to repeat this statement, just understand it very carefully, that the price of the share is the amount which you are willing to invest to get an approximately yearly profit of this much EPS value over the year, because over the year this company is giving this much profit behind one share. So this is how you can value the companies. Now let's see Mark Sands Technology. If you can see Mark Sands, that is a very good pharma company. 73.9 is the share price and the EPS is 2.01. So this is how you can check many of the companies. If I'll show you Morpin Laboratories Limited, the price of the share is 61.80 is the price of one share, and the EPS is 2.10. So behind each and every share, company is giving right now 2.10 yearly, approximately yearly profit of 2 rupees behind each share. So this was how you see the earning price share, EPS.
I hope that you understood the logic behind EPS. I'm going to repeat it once again. So, just to clarify, because this is a very deep sentence and you will get to find this very interesting, that earning per share, that is, what is the price of share? Price of share is the amount which I am willing to invest in a company, which is approximately giving me approximately yearly profit it can give me back, which is what? EPS, earning per share. So to get a profit of EPS, I am willing to invest the price of the current share. That is how you can understand this EPS. Now if you got to learn the complete information of EPS, let's move on to PE ratio, that is price to earning ratio. PE ratio is one of the best and major ratios which you have to learn while doing stock analysis, while doing share analysis. So PE ratio, what is PE ratio? Now you have to understand just a similar concept which I told in the beginning of this one, that is the times of EPS which I am willing to pay or willing to invest to get an yearly profit of the amount which is equal to the EPS. Yes, you have to understand this very carefully. It is the times of earning per share, that is times of how many times of EPS, like one time, five times, 10 times, 50 times, how much times of EPS I am willing to pay to get an yearly profit, and this approximate yearly profit of the amount worth EPS, that is called the price to earning ratio, that is the times, that is that value, the ratio, that is known as PE ratio. Now the major question is, before that, let's take an example of that too with the actual company's PE ratio.
Let us analyze some live PE ratio examples. Yes, here you can see Hindustan Unilever Limited. Here the PE ratio, where will I get the PE ratio? And here it is, 70.86 is the PE ratio. Is it high or low? It is pretty high, but we don't have to just judge it by the number. I have told you that 20, 30 or 40 is good, but 70, it depends on the other two factors which we are going to discuss just 1 or 2 minutes from now. Now let's see a few more companies PE ratio. Let's see Bajaj Finance. Bajaj Finance PE ratio is how much? Right now it is 74.66, and 56% of the analysts are suggesting to buy this stock. And if we see Indigo's PE ratio, how much is it? It is minus 270.02. I will also tell you that what this minus sign will indicate. And apart from that, let's see ITC. ITC is the company which makes cigarettes and all of those. So here the PE ratio is 16.47, which is very nice. But also we have to study the next two factors to tell that is it really nice or not. So this is a very nice example of 16.47. Let's see in ticker phenology. Let's see in ticker phenology. If we see the Morpin P ratio, that is 29.5, which is pretty good, not that bad. Let's see Dixon P ratio, that is, you can see 168. So how much is it? Is it very high or is it very low? How to determine that? Let's study that.
Now the major question is how you can do the stock analysis based on the PE ratio. Yes, that is a major factor which you have to give the maximum focus on. And I'm also pulling the maximum out of this video. So just understand this one concept, that how you can judge a company is doing good profit, or the current PE ratio or the current price of the share is overpriced or underpriced, it is overvalued or undervalued. So this is how you can get the right company to invest in at the right moment, before the breakdown, before the company is perfectly priced. So how to get that? How you can get the best out of a PE ratio and what, and how a P ratio can help you get the best company to invest in. It is all about finding the perfect moment of entry. It is all about finding the perfect company which you can invest in and which can boom 100 times or 200 times in the next 2 or 3 years. Now let's imagine this one thing. PE ratio. You have to check the PE ratio over the years, that how much was the P ratio 10 years ago, how much was the PE ratio 5 years ago, how much was the PE ratio 2 years ago, and from this PE ratio, the historical PE ratio, you will get to learn a lot of things. Now I'm going to tell you a few simple steps. Listen this very carefully, and if you want to write it down, you can also note it down. First of all, you have to check the PE ratio of the company. How much is it? If it is 20, 30, then it is nice. If it is 50 or 60 or 80, then it is very high. That is, you are paying 80 times of the earning per share to get an approximately yearly profit of the earning per share worth. So this is pretty high. Now, is it really high, or is it just because the company is having enough profit in these many years? Company is having enough, like company is growing in profit ratio, and profit growth company is having in last 5 years, company was having good profit growth in last 3 years, or good growth, and in the last year company made double triple of the profit. That can also be the reason of the high PE ratio or high price of the company. So what you need to do, you have to write down, you have to note down these 2 or 3 steps. First step, you have to compare the current PE ratio to the historical PE ratio. Second step, you have to see the PE ratio over the years, that how and what PE ratio company had in 5 years ago, what company PE ratio had in 4 years ago, 3 years ago, and apart, like what is the actual consistent flow of this PE ratio over the years. Now if the company was trading at 30 and now it is at 60, then it denotes that it is trading at a higher P ratio than it used to. But also you have to then compare that how much profit growth company made in last 5 years, last 3 years, and last 1 year. That can also define that company is overly priced or underly priced.
Let us see the practical example of all of these points which you just heard about. Let's see the Sun Pharmaceuticals Industries Limited. Here the PE ratio is 54.93. As you can see, the PE ratio, that is 54.93. Now the second step which we have to do is we have to see the price to earn ratio, current price to earn, as compared to the historical price to earn ratio. So we can see that in December 2019 it used to trade at 39 to 40 PE ratio. Then in March it went to 27. Then in September 2020 it is 41. Then in March it is 48. So we can see that it is mostly trading at 40s range. In the 40s range it is trading. So right now it is 54.93, which is not that bad, which is not overvalued, but yeah, it is increasing over the years. And second thing which we have to figure out, that is profit growth graph. That is, in 5 years company is having enough profit, that is 33% growth. In 3 years company made 422% growth, and in 1 year company made 293% growth. So which is the best example, you can say that this is the best profit growth. So we can say that due to the profit growth company's PE ratio is increasing, and the company is not yet overpriced, it is underly priced, because the PE ratio is still in the same comparison, and the company is making enough, more than enough profit growth over the years, you can check. Apart from that, now let's see the ratio companies price to earn. See, here is the price of the share of the company, it is gradually increasing, but still this is one of the best examples of studying this sector. Now let's move on to some other example. Let's see Dixon Technologies. Here if you see Dixon Technologies, the P ratio is 168. Now is it high, is it overly valued or not? Let's see here the comparison. Let's see the comparison. It is 47, used to trade at in June 2020, it was 60 49, and if we see the 5-year ratio, it is just moving very high and very upwards. Now it can be said that it is very overly priced, but it will be right to say that only when we compare it with the profit growth. Is the profit growth showing the similar advantages? No. See, 5 years company is having 64% growth, that is very good. In 3 years company is showing 36% profit, which is not that bad. And in 1 year company is showing 96% growth. So we can say that yes, it is deserving, but right now many people in bulk volume are purchasing this stock. That is why the PE ratio is so much right now. Like this is almost double, like from 54 it went to 175, which is almost triple the PE ratio which it used to trade at June 2020. That is just 7 to 8 months from now. So in 8 months the PE ratio jumped over 3 times, which is not justified by the profit growth ratio. So from this thing you have to check that if is the stock is overly priced or underly priced.
As you just saw in the video, so this is the first step while doing the stock analysis. You have to check out the PE ratio. Secondly, you have to compare the current PE ratio with the historical PE ratio over the years. And third step, you have to see the profit growth of the company over the years, in the last 5 years, in the last 3 years, and in the last 1 year. Now, which company is the best to invest in, and how can you get excited the most that yes, I found that company? Just let me give you an example. If the company is having stable PE ratio versus historical PE ratio graph, that is in 2000s also that company was trading at 30 PE ratio, in 2010 also it is trading at 30 PE ratio, and just it is a stable one like 30 30 35 32 33. If it is stable PE, current PE ratio to the historical PE ratio. And the second point, that the company is showing very positive profit growth over the years. If this is the case, then you have found the best companies according to this one process. Now in the other videos also we will get to learn a few more processes which you have to check, and you have to go through this concept very nicely. And if you just got any doubts, you have to repeat this, you have to rewind this video, and you have to watch this again and again till you understand that how to compare and how to analyze a stock by comparing its PE ratio with the historical PE ratio. And how can you get to know that a company or a share is overly priced or undervalued, so you can get the best company to invest in. So this was the complete video for the first, that is Stock1Prime, and our first initiative to start the stock series. So you all investors can be one of the Warren Buffetts, one of the next Warren Buffetts, and give the best. All the main intention behind making this video, the main motive of this video is just to share each and every experience I have and all the practical things which I have already done and I have got results. Because the amount of happiness I know I'll get or I have right now, I just want to get you all to that particular level and particular state of happiness. And how you can get that state of happiness? just by completing your parents' dream, just by completing your own dreams, and just by completing your loved ones each and every single dream which they ever wanted to do or which you ever wanted to happen with them. So how can you complete those dreams? How can you send your parents, or how can you go with them in a world tour? Just by earning the maximum amount of money and become financially free. And this stock investing is one of the ways to become financially free. I promise you that one thing, that once you get to analyze each and everything, after that the stock study, you can really get some good amount of money from stock market. So I hope you got to learn the best values from this video. Stay tuned for more amazing stock videos, and the next Stock2Prime will be uploaded very soon. See ya, take care, have fun, keep hustling, keep learning, keep exploring.